How long should you keep old tax returns? During tax season 2023, you may wonder how long you should keep your old tax returns and other paperwork associated with filing your taxes. For those with hard copies of your taxes, you might wonder if you can scan them. Or do you need to keep hard copies? Keep reading as I share how long you should keep your old taxes and how to get them out of your way, hopefully. How long do you need to keep old tax records, receipts, and total tax returns, state and federal? Another common question is how to safely store these tax stocks without feeling like you are a hoarder. What does the IRS say about keeping old tax returns? According to the Internal Revenue Service, the length of time you should keep your tax documents will depend on the type of files you are talking about and what kind of taxable transactions the paperwork relates to. In plainer English, but still vague, you should keep any tax records to support your income, various tax deductions, tax credits, and exemptions until at least the period of limitations for each tax return ends. According to the IRS, what is the period of limitations? The period of limitations is when you can still amend your tax returns to claim a tax credit or refund. The IRS may still assess you with additional tax liabilities during this period. Specific examples of this are listed later in the article. Unless stated otherwise, a period of limitations refers to years after the taxes were filed. Period of limitations that apply to income tax returns via the IRS website. IRS website. Keep records for 3 years if situations 4, 5, and 6 below do not apply to you. Keep records for 3 years from the date you filed your original return or 2 years from the date you paid the tax. Whichever is later if you file a claim for credit or refund after you file your return. Keep records for 7 years if you file a claim for a loss from worthless securities or bad debt deduction. Keep records for 6 years if you do not report income that you should report, and it is more than 25% of the gross income shown on your return. Keep records indefinitely if you do not file a return. Keep records indefinitely if you file a fraudulent return. Keep employment tax records for at least 4 years after the date that the tax becomes due or is paid, whichever is later. Generally speaking, you will need to keep your tax records between 3 and 7 years. Remember to keep your tax records for 7 years to be on the safe side without needing to recall the fine print. When should you keep some tax records longer than 7 years? With seemingly unlimited digital storage, it seems easier to keep old tax records than manually delete them each year. I will likely keep my older tax records indefinitely. Also, as a business owner, I have found it interesting to revisit my income and even business expenses throughout my career as a financial planner.